Welcome to the deep dive. So, if you've been tracking the relentless pace of change in how we move money, we have to talk about fintech.
Absolutely. It's unavoidable.
But here's the thing, thinking of fintech as just one giant industry, well, it's like calling an entire metropolis a single building. It's just too complex.
It is. It's a complete ecosystem. And our sources are pretty clear that to understand it, you have to see the foundations of the
Okay,
structure.
so let's unpack that. What's the structure?
If you look closely at global fintech, you consistently find 5 major specialized areas. You could call them pillars, really. There's digital payments, lending technologies, wealth management platforms, or WealthTech.
Right, and InsurTech.
InsurTech, exactly. And the 5th one, which is crucial, is regulatory technology, RegTech. Those 5 hold up the entire system.
That gives us our map. And for this deep dive, we're going to focus on what is probably the most visible, the most foundational pillar, digital payments.
It's the front door for almost everyone.
It really is. I mean, if you've ever used your phone to split a bill with a friend or tapped your card somewhere, you are part of this massive global transformation.
That's the reality for billions of people now.
Yeah.
And at its core, digital payments. It's just the technology that lets money move electronically. But the real revolution, the thing that sets this sector apart, isn't just digitization.
It's the convenience.
It's the relentless pursuit of speed, security, and especially convenience. It's all about tearing down the friction that, banks and physical cash used to create.
Okay, so let's start with the developed markets, specifically where the customer experience has been overwhelmingly shaped by private companies. The U.S. is the perfect example here.
Oh, absolutely. When you look at the U.S., the story is just dominated by the success of these massive platforms. You're talking about PayPal, which kind of carved out that initial online space.
Yeah, the original.
Right. Then Stripe came along and streamlined everything for e-commerce. Square made it easy for small businesses to take cards. And of course, Apple Pay just embedded payments right into the phone's OS.
So what was the big structural shift here? I mean, these players, they didn't just digitize old processes, did they? They completely changed what a transaction is supposed to feel like.
That's it, exactly. They forced the entire U.S. financial experience to become mobile first. Zero friction. The key shift is that these firms own the customer interaction.
They own the data path.
They through the data path, and they often just bypass the traditional bank infrastructure altogether. I mean, if you can pay for something in 2 taps on your phone, anything slower than that just instantly feels archaic. They set the standard.
Now, if we jump over to the UK, we see a really fascinating contrast. Big tech is there, for sure, but our sources frame the UK more as a global reference point for efficient payments because of a totally different foundation.
Yeah, it's all about the regulatory infrastructure.
So policy, not just platforms.
Exactly. The UK's approach was much more deliberate about opening up the financial landscape. They established the faster payment system years ago, which guaranteed near-instant bank transfers, no matter which bank you used.
But the real game changer was open banking, right?
That was the game changer.
Can you just break down open banking for us? It sounds a bit like jargon, but it feels so crucial to that market.
It is. So open banking basically mandates that as long as you give your permission, your bank have to securely share your financial data with other authorized third-party providers.
So they're opening up the pipes.
Think of it exactly like that, opening the pipes of the bank infrastructure. So it wasn't about relying on one big platform to innovate for everyone. It was about forcing competition by creating a level playing field for anyone new.
So instead of just a few proprietary apps dominating, open banking data allows everyone to innovate on top of the same information. What did that actually lead to?
It led to an explosion of competitive digital products. It fueled the success of all these new digital wallets and, more importantly, the rise of the neobanks.
Like Revolut and Lonzo.
Revolut, Monzo, yeah. They could build these sleek, really user-friendly banking experiences because they could access and analyze customer data in ways that the legacy banks either couldn't or just wouldn't. The payment environment there is hyper-competitive because the infrastructure itself is mandated to be open.
That comparison is so key.
Yeah.
You have platform dominance in the US versus this regulatory-driven openness in the UK. But this is where the story gets even bigger, because payment innovation isn't just about developed markets cleaning up old systems.
Not at all.
We have to shift our focus to emerging economies, where digital payments are creating, systemic transformation at a scale that you just rarely see anywhere else.
Yeah, we have to look beyond the US and UK now.
Yeah.
Because the pace and the sheer scale of adoption in places like India, China, It's reshaping the global landscape in a much more profound way. If you want to
Mhm.
talk about public utility, India's Unified Payments Interface UPI is arguably the most important payment innovation of the last decade.
Okay, so why is UPI such a game changer compared to, say, the platforms we were just talking about in the US?
It's a completely different philosophy. UPI is built on top of a public digital infrastructure, what people call the India stack, and it allows instant, interoperable, and very low-cost transfers between any bank account using simple mobile apps.
So in the US, money moves through private layers like card networks. But in India, UPI is like a single public rail for everyone.
A unified public rail, that's a great way to put it.
And what's the impact of it being low cost and instant at that kind of scale?
Well, the scale is just staggering. UPI is now processing billions of transactions every single month. We're talking volumes that surpass the major global credit card networks combined.
Wow.
And this infrastructure drives financial inclusion by making transactions essentially free for billions of people, from a street vendor to a massive corporation. And that is why it's being studied globally. Governments are looking for an alternative to relying on private, fee-based payment systems.
That public infrastructure model is incredible. But now let's jump straight to China, because they also got this massive instantaneous adoption, but through the complete opposite mechanism.
Exactly the opposite. Private enterprise. China is the ultimate example of consumer-driven adoption through these integrated super apps. Alipay and WeChat Pay didn't just handle payments.
They became part of everything.
They redefined consumer behavior by embedding QR-based payments into every single aspect of daily life. Social messaging, ordering food, everything.
Okay, so this brings up a really important question. We have India providing the public digital highway, and then China providing this, I don't know, private, seamless luxury vehicle that runs on its own private roads. Isn't that private super app model actually more convenient for the user?
And that's the core tension, isn't it? WeChat Pay is undeniably convenient because it integrates everything. It's one seamless experience. But that convenience comes with trade-offs.
Competition, data privacy.
Potential trade-offs, yeah, around competition and the concentration of data inside just two private giants. The Indian model prioritizes open competition and low barriers to entry. You have lots of different payment apps, but they all run on the same public utility rail. Both strategies worked, but their long-term economic structures are fundamentally different.
And that rapid scalability, that mobile-first approach, is also crucial in supporting economic growth in other regions, right? Often for people who are totally outside the formal financial system.
Oh, yeah. We can't overlook the transformative role of mobile-first solutions elsewhere. I mean, look at Kenya's M-Pesa. It launched over a decade ago.
Ancient in tech terms.
Right, but it quickly became the dominant mobile money service, effectively acting as the financial system for so many unbanked citizens. And it showed how simple mobile phone technology, not even smartphones, could bridge massive financial divides.
What about other really dynamic markets like Latin America or Southeast Asia?
Well, in Latin America, you have to look at Brazil's Pix system. It has fundamentally changed banking there in just a few years. Like UPI, Pix is an instant payment system launched by the central bank. It enables 247 transfers and it has massively displaced card usage.
So another government-led initiative.
Another one. It just shows how quickly governments can drive this change when they prioritize it. And then you have Singapore, which has been intensely focused on cross-border efficiency. They have systems like Fast and PayNow positioning themselves as this regional hub for financial interconnectivity.
So if we synthesize all this, what does it really mean? We've looked at big tech domination in the US, regulatory openness in the UK, public utility in India, private super apps in China. They all get to the same place, though.
They do.
Faster, cheaper, and fundamentally more accessible transactions.
And that accessibility, that is the foundation for everything else in FinTech. This is where we circle right back to that full structural picture we started with. Digital payments might be the most visible pillar, but their efficiency powers the other four.
Okay, I can see how instant payments would fuel wealth tech and lending. You get instant credit, you can execute trades faster, but how does that speed directly affect, say, InsurTech and RegTech?
It's all about the data flow. The speed and the accuracy of transaction data are critical for regulatory compliance, for RegTech. If money moves instantly, regulators need real-time checks for things like anti-money laundering. For InsurTech, rapid data access lets insurers offer these highly personalized, usage-based products. They can assess risk in real time.
So quicker underwriting, faster payouts.
Exactly. The payment layer is the prerequisite for all of these sophisticated, data-driven financial services.
That connection is so important. So the simple act of making a transaction faster underpins everything else. the potential for blockchain, advanced AI for underwriting, complex cross-border finance. We're not just talking about buying a coffee anymore.
Not at all. We're watching the entire financial services industry reshape itself in real time on a global scale.
This is an incredible transformation.
It is. And since India's UPI model, that public utility approach, is now being studied by governments everywhere as an alternative, just consider the potential future impact of that. What does the long-term competition between that public utility model and the private big tech platform model mean for the core infrastructure of global finance?
Right.
Are we going to rely on these highly convenient, integrated, but commercially controlled systems, or on low-cost, open, government-backed rails?
Yeah.
That fundamental debate over who owns and controls the movement of money, that is the trillion-dollar question this whole revolution is forcing us all to ask.
That is definitely something to think about, especially the next time you tap your phone to pay for something. Thank you for joining us on this deep dive into the world of digital payments. We'll catch you next time.